Good evening, everybody. Can you hear me? Hello, can you hear me? Can you please type on the chat box? Can you hear me, please? Okay. All right. Okay. Good evening, everybody. Um, Good evening, everybody. My name is Miracle, and we call it somehow because this is actually my first time doing this. I've not done it before, but I'm confident that I'll do well. So after the meeting, I'll expect your ratings. So before I start, I want to give appreciation to whom is due, our Coach Easy. I'm very grateful for this opportunity you have given to me. Big thank you to you. That being said, please, this call, or let's say this strategy I'm about to show you guys here, is not only for both forex traders, both of forex and HFX. So if you know you are a beginner and you are finding it hard to kick off with your forex journey, then this call is for you. And if you have been here for can do it, whatever you learn from today, just implement it on whatever you are using before. Just try to add it up. Then whatever you know that is not valuable in your whatever you know is not valuable in your previous strategy, you take it out, and whatever you know is not valuable to you in this new strategy, you take it out, you pick out the valuable ones and you add them together. Now, with that being said, I'm kicking off straight away. Now, please, I hope you are with your biro and paper. Please, your biro and book, I mean, it's very, very necessary. We need it. So I'll start with this strategy is all about how I trade, and I've been practicing this for 2 to 3 weeks now, and it has been very, very profitable. Like, I went this week without loss. Like, I did not take, okay, I had 2 loss on Monday. Yes, 2 loss on Monday, and those losses were just $1. Yes, just $1 loss. But I'll tell you, it's very, very profitable, and this strategy does not require any indicator at all. Like you don't really need indicator to use this strategy. You don't use it. You understand? So this, I did not just watch it from somewhere. Basically, although I watched random videos and I watched this particular strategy for a particular place, and I added all what I've learned, everything added to it, then put together, then I came out with this strategy. So I actually named it myself structural breakout strategy. It's all about market structure, like the way the market moves, the structure the market forms, how it breaks, and then the breakouts in the market, the retesting and the key levels, expansion, stuff like that. That's what this strategy comprises of. So if you want to understand this strategy you'll be learning this night, after this call, I'll give you a simple advice. Pick up your phone or your system, your book and biro, go down to learn chart patterns. There are different type of chart patterns. You understand? There are different type of chart patterns. Learn them. For HFX traders, for binary traders, the best way to trade binary, to my own understanding and the way I've been utilizing it with this strategy, is to trade on reversals. Like trading with reversals is going to give you more profit. Like it's going to make you more profitable if you are able to wait for these reversals. When they come, you get on from there. When you want to see the reversal, you wait for the reversal to break. And once the reversal breaks out, when it breaks, because whenever there's a breakout from any trend, support, resistance, consolidation, anywhere, when there's a break in the market, before the market moves, it has to retest. And sometimes when this market retests, in terms of retesting, if this push of the new trend, like let's say if you are in an uptrend, like this is an uptrend now, you see this is an uptrend. I hope you can see my screen. Can you see my screen? All right. Now this is an uptrend. Now for this uptrend that is moving up. Now in like as this market is moving, there are two ways a trend moves. I like trading trend markets. I don't trade ranging market. Trend market does not work for this strategy. It does not work. So if you want to use this, then forget about ranging market. It has to be a trending market. And for you to get trending market more often, you have to be familiar with trading sessions. Yes, you have to be familiar with trading sessions, because if you know these trading sessions and you trade the currencies of those trading sessions, you are likely to find trades more whenever you want to trade. Now I'll give everybody here some trading session. Like I'll tell you people the trading sessions we have for beginners. For those of you that don't know it, there are basically five types. There are basically 5 trading sessions. We have 5 trading sessions. Please write it down. We have the Aussie trading session. We have the Asian trading session. We have the London trading session. We have the New York trading session, and we have the Aussie, Asia, London, Frankfurt, and what am I even saying? I'm starting again, please. Write it down. First, we have the Aussie trading session. Secondly, we have the Asian trading session. Thirdly, we have the London session. Fourthly, we have the Frankfurt session. And lastly, we have the New York session. Now, in these 5 different sessions, there are particular currencies that are more powerful in these sessions. I'm not saying that other currencies do not trade in these sessions, no. But these sessions, there are particular currencies that are more strong. These currencies has more power during this session. For me, I prefer trading Frankfurt sessions, and that Frankfurt session comprises of euros. Euro is the main currency for Frankfurt session, and you need to know the time these sessions open. Whatever session you want to trade on, you need to know when it opens. So, because whenever a new session opens, there is a big pump in the market. You understand? Because if any session is to open, it's always missing another session. Because each session lasts for 9 hours. Now, the one I trade, and if you want to trade the session, you have to trade sessions that at least when you are trading, there should be like two sessions to be open. Like you have 2 sessions at that particular time that are open, because each session has 9 hours before it closes. Now, for the London session, the main currency there is GBP. You understand? You have GBP for the London session. You get, so the London session opens 8 o'clock Nigerian time. You understand? London session opens 8 o'clock Nigerian time. Then the Frankfurt session opens 9 o'clock Nigerian time. And these two sessions last for 9 hours. These are the sessions I trade. That's why I'm saying it. You can go online and Google the time for the other thing. So that time is convenient for you. You pick them. And advantages of trading with these sessions are: one, it makes you familiar with their currency pairs. It makes you familiar with your currency pairs. Secondly, it enables you to find trends more often in the market. Thirdly, it enables you to be able to identify patterns easily, and chart patterns and candlestick patterns easily in the market. You understand? So for me, I like trading London and Frankfurt sessions, because whenever the Frankfurt session opens, before the Frankfurt session opens, you already have the London session, which starts 8 o'clock. So when the London session opens, there is a big pump in the market. There's already a trade for the GDP. You get it? So now the Frankfurt session opens. Boom. When the Frankfurt session opens, another big pump in the market. So within the space of 8 o'clock till possibly 11, 12, there is a big pump in the market. Now, to confirm this statement, for people that are using pocket option, you will find out that at night, now let me show you this. At night, you hardly find a currency pair that on pocket option. At night, you hardly find a currency pair that is above 81% or 82%. You understand? You always find currency pairs at 70 mostly, and not all currency pairs are open at night for pocket options. You get me? So if you are using pocket option, the night session is never going to benefit you. So the best session you can use on pocket option is either the London session, Frankfurt session, or New York session. And pocket option has lots of benefits. I don't want to talk on it if I hit on the main details. Pocket option has lots of benefits. On pocket option, you can set a trade, like for beginners, for newcomers. When you have made the analysis, your indicators, done everything, you already have your entry. But at times, when the price gets to that entry, you are scared to get into the market. Yes, it happens to especially the beginners. You are like that. Okay, what if it does not respect this place? What if it does not happen? And most of the time, it respects it. Now, pocket option enables you to kill that fear by making you place pending trades. You can see it on my screen. Pending trades. You can just, like, you have made, okay, I want to go on a sell for this. This is Euro USD. I want to go on a sell for this market for 3 minutes, but I want it to get to 124 before the sell kicks off. All I have to do is come to my pending trade. I come here, I change the time, I put in the price I want it for. 3 minutes, I set in my time, 3 minutes here. Now, this percentage simply shows you, like, okay, if it's below for me, I prefer if any currency pair I want to trade, if the percentage is not above 75, I'm not trading. I'm looking for another. Now, if I'm trading the Frankfurt session, if all the currency pairs on that Frankfurt session, I cannot find anyone above the 75%, I'm off. I'm not trading. I am not trading. I'll just leave the market till the next day. That's how I trade. It's my own trading style, and it works for me. It's better not to trade it's better to miss a trade than to lose your money. Because when you miss the trade, your money is there. But when you lose the trade, you lose your money also. You understand? So this place enables you to do that. I can just clean this and I put, let's say, okay, this market now is 60%. Let's just use 50% now. Then I put in the amount I want here. Pocket option does not allow you to place a trade on as in, and will not allow you to take any trade above $1,000. The highest amount you can put on a trade is $1,000. Demo real account is 1,000. So I'll just put it, let's just say 1,000 or 100 here. And I want to go for a sell. I click sell. I'm done. I'm done like that. So anytime this market gets to that place, to this time, look at it here. So anytime the market gets to 1.04, 124, the trade will start up. Anytime, even if it is tomorrow, this trade gets to this point, it's going to kick off immediately. You understand? Immediately it gets there, it kicks off. And my time frame I already said is 3 minutes. That trade is going to last for 3 minutes. Yeah, so if you're able to get your entries before it gets there, and you place out these entries, pocket option kills your fear. It helps you reduce your fear. Now you can even place double up on pocket option. It's new. You can do double ups there. And there are many things on pocket option. If you learn this strategy I'm about to teach, this strategy, you can even trade with just your pocket option like this. You don't even need to go to the trading. Although it's not advisable, but the fact that you don't need any indicators, just your trend lines, your support and resistance, your chart patterns, your candlestick, your key levels. You have all that here. Look at it. You have your trend line, rectangle, vertical line, your horizontal line. Everything you need is here. And all the tools you need is here. So if you are familiar with this strategy, you can just easily be trading only your pocket option. You don't even need the trading, but it's always advisable to use the trading view. Now, back to what I'm saying. Now, for you to understand this strategy, please write this down. Very important. Write this down. Very important. Okay, where do you find the percentage for each pair and session? The percentage for each pair. Now, this is where you find the percentage. Look at this. This is my broker. This is my pocket option broker. My account. This is my demo account. Look at it. You have currencies. This broker enables you to trade crypto. You can trade crypto here. So if you know how to trade Bitcoin and you want to trade on weekends, you can do it. Look at it. Ethereum. Like that. Look at them here. You can trade crypto. And I told you that at 9, many markets are closed because there are limited sessions open at night. At night, mainly, you find Aussie session and Asian session. And the space between them is much. So it's just like one session will be open and another session. So you don't find opportunities much during at night on pocket options. So if you're using pocket options, the best time to trade is London, Frankfurt, and New York. Now look at the currency pairs here. These are OTC currency pairs. I don't do OTC. Now, currency pairs here during the Frankfurt session is euros. All currency pairs are traded during every session. You understand? All currency pairs are traded during all sessions. But the thing there is, for every session, there's a particular pair that is stronger. If that particular currency is on an uptrend, on that session, that uptrend is going to be strong. If it's on a downtrend, that downtrend is going to be strong. Now, if you are trading if you want to trade Frankfurt session, now if you are trading Frankfurt session, you should be able to know that during that session, it is not only the Frankfurt that is open at that time. You have the London there too. But the secret behind it there is the Frankfurt session is more powerful than the London session. Why? Because more countries in the Europe use euros. Let's just say, okay, euros is being used in more countries than pounds. Yeah, the countries that make use of euros are more likely that make use of pounds. And the general currency in Europe in the European countries is euros. Now look at it. Do you see what happened just now here? It got to 124 and the market kicked immediately. See it. The market kicked immediately. Look at the open price here. If you can see, please type on the chat box. If you can see the open price. If you see the open price here, please type on the chat box. Good. Look at it. This is the open price. It got to, this was the price I told you, 124. The percentage was above, we set out 50%. So it was above 50. So it did not take to it. This was 60%, and ours we said 50. So it's above. Definitely if you pick it. But if it is below 50, the trade will not commence. You get it? The trade will not commence. Automatically the trade will kick out by it, as the trade will decline by itself. You get it? Now look at the double up. It's new, just like you have in buy forex when your trade is going on and you see that yes, it's going where you want to double up for the same time frame, you click double up. You understand? You double up your trade. That's when you are sure. So no, that's that. As I was saying, back to what I was saying. Now, if you are trading the Frankfurt session, you should know that the Frankfurt session is not only that session that is open. You also have the London session open at that same time, and you have the Frankfurt. But the advantage you have there is the euros, which is the main currency for Frankfurt session, is stronger than the GBP. You get me? In the sense that the people making use of that euros is more. So definitely the people buying euros or selling euros will be more than the people buying pounds. You get it? That's just the secret there. So for me, if I'm trading this session, if I'm trading on the Frankfurt session, I don't trade any currency. I don't trade any pair that does not deal with euros. I trade all pairs, but if I want to trade on that session, I know I want to trade mainly. If I want to practice, I practice with any pair. But if I want to trade mainly, I do not trade any pair that does not have euros. Now look at the currency pairs. You can see favorite. These are my favorite currency pairs. Look at them. But my best currency pair here is the Euro card. I love Euro card because I've told you that Euro card respects my zone. And another thing there is when I'm trading Euro card, the Canadian dollar session is not yet open because the Canadian dollar is under the New York session, and New York session opens 3 o'clock Nigerian time. You understand? So if I want to trade, the London session opens 8, Frankfurt opens 9. I'm getting on my system around 9:30. I'm not getting on the market immediately after the market kicks off. No, I'm getting it. I'm going to go in 30 minutes after the market is in. And when you do that, there's every chance for you to find trends more often. Like your percentage, your chances of finding trend doing this is higher. Let's say you have 80% chance to find trends if you know the session you are trading with and the currency. If you are trading with the currency for that session. So if I'm trading the Frankfurt session, I prefer trading Euro USD and Euro card. Those are the two currency pairs I love. These are the two currency pairs I prefer trading more often. Sometimes I trade Euro odd, I trade Euro JPY, but the two best I prefer is Euro card and Euro USD because they always respect your key levels during this time frame. 8 a.m. for London session, 7 a.m. for Frankfurt session, and each session lasts 9 hours. 9 hours. 9 hours.
along the line. Just write it down. 8 a.m. 8 a.m. for London station. Just 1 hour difference. 8 a.m. for London station. 9 a.m. for Frankfurt station. London station. Can you hear me? Can you hear me? Type one in the chat box. Can you hear me now? Can you hear me now? If you can hear me, please type common on the chat box. Thank you. Like I was saying, somebody asked AM or PM. Like I said, 8 a.m. 8 a.m. London session opens officially 7 a.m. in London time, but we are 1 hour, like we are 1 hour ahead of them. So I'm just giving you the Nigerian time. So if you're in Nigeria, just note that the London session opens 8 a.m. Nigerian time. 8 a.m. Nigerian time. Frankfurt opens 9 a.m. Nigerian time. That's it. Now, like I said, please write this down. The major things you need to know for this strategy, these are the things you need to know, because you're not using indicators. You're not using indicators. This slide does not involve any indicator. You can see on my screen here, there is no indicator. You understand? I only use 2 indicators, and I don't even use them to trade. Yes, I just use every Cabral to check if my support and resistance line is correct. If I've drawn them correctly, that is the only thing I use every Cabral for. Apart from that, I don't use it for any other thing, because it does not require any strategy, any indicator. But I'm actually working on how to pair with DMI stochastic, because they both have similarity, like it works alongside, but I don't know how to use it yet. So I don't make use of it. I just use the strategy raw. Like I was saying now, please write this down. First of all, import. If you can hear it, please type common on chat, but I'm going to read what I'm saying now. First thing you need to know is the impulse. You need to know impulse, exhaustion, breakout, retest, key level, break of structure, and candlestick confirmation. You understand? These are the things you have to look out for this strategy to give you money. Again, these are the strategies you have to look out to give you your money. Now, all what I just said, all what I just called just now, they all fall under 3 things, which is your support and resistance, which are your key levels. Support and resistance, which is your key levels. TLC, trend level confirmation, which is your trend line. And chart pattern, which is your candlestick confirmation, break of structure, exhaustion, impulse. Your chart patterns comprises of your impulse, exhaustion, breakout, retest, break of structure, and candlestick confirmation, just like that. So now I'll begin. Now for this, so what's one strategy? The first thing you do after you have gotten your pair, you know, okay, I'm trading the Frankfurt session. Let's say now this is the Frankfurt. This is the currency pair for Frankfurt session. Look at it, Euro card, my favorite. Is my favorite. Euro card and Euro USD is my favorite. You get my 2 best. Those are the, okay, I'll repeat it again. Please write it down. impulse, exhaustion, breakout, retest, expansion, key levels, break of structure, and candlestick confirmation. Please, if you got that, please type one on the chat box. If you got all what I just read, please type one on the chat box. Or I should, if you want to repeat, type repeat. Can you hear me? Okay, I'll be repeating. Impulse, exhaustion, breakout. Okay, thank you. God bless you. Somebody just put it down there. So that is that. I'm proceeding. Now, I've gotten my pay, I've gotten everything. Another tool you need to use is your currency strength meter. It does not really affect this strategy, though. It does not really affect it. You understand? Because this strategy is going to enable you to locate trend easily as long as you are trading in a particular session consistently. You get whatever trend the market wants to form, as long as you are using this strategy, you are always going to locate it. And even if you miss out on the first, I don't know like now look at it. The trend kicks up from here. The trend kicks up from here. This is where the trend kicks up from. Now, if you miss out on this place, you were not able to get an entry from this place to kick up from. Can you hear me? Can you guys hear me, please? Okay. All right, okay. The call is being recorded. So after the call, the video will be posted. So you can just watch the video over and over again so you can save time. Please, to save time. You can watch the video over and over again to save time. I'll try to shout louder. I'll try to shout louder. I'll try to shout louder. All right.
Is my voice clear now? Is my voice clear now? All right, thank you. Thank you very, very much for that response. All right, let's go. Let's speed up. Like I said, impulse. Now, this already enables you to find multiple opportunities on the market. You get like, even as a forex trader, even if you miss out on this, you are trading forex, you are trading forex, you are trading HFX, and you miss out on any entries, as long as the trend continues, even if the trend is going to break along the line, this strategy will always help you locate the right opportunities to get in, as long as you know all the details it entails. You get it? Now, like I said, now the market kicked up from here, it went up here. This will give you this is an uptrend, right? This is an uptrend. Now, how does an uptrend moves? It goes like this, comes like this, goes like this, comes like this, goes like this, comes like this. Bam. Now, when an uptrend is moving, an uptrend moves in two ways. Now, listen. Please, this is where you have to be attentive now, please. An uptrend moves in two ways. Impulse. An uptrend moves in two ways. Impulse. Impulse and exhaustion. An uptrend moves in two ways. Impulse and exhaustion. Now, when the market is moving in an uptrend, from this place, from this point where my mouse is, from this point here to this point is what we call impulse. You can call it push, you can call it force, but I prefer calling it impulse. Like there's an impulse here, there's a force that is pushing, there's a fuel that is pushing this market. Now, at some point, when this fuel gets finished, it has to come and, like, if you are driving a car and your fuel finish, like your fuel don't finish on the motorway you drive, you guys call buying new fuel now. That's what you call exhaustion. Now the impulse in the market gets over, it gets exhausted, it comes down. And when it gets exhausted, for it to continue in that uptrend, it forms a pattern. Wherever there's an exhaustion, there is always a pattern. Even if you cannot identify the particular pattern in that exhaustion, there is a pattern in that place. I don't know all the patterns in forex. I only know few, and the few ones I know, I try to identify them and use them for my own benefit. Again, there are three types of chart patterns in trading. Three main groups of chart patterns. Three main groups. You have the reversal chart patterns, you have the continuation chart patterns, and you have the bilateral chart patterns. For binary traders, you have to be familiar with the reversal chart patterns, because if you are trading binary, the best way to make your money is from reversals. If you are trading forex, you have to know reversal and continuation, so market does not spike you out. But for binary traders, be familiar with reversal patterns, because you're only in the market for 5 minutes. This is the 5 minutes time frame. Look at it. This candle here, 5 minutes, 5 minutes, 5 minutes, 5 minutes, just like that. And for every reversal, for the reversal to continue, it needs a push. When the market gets exhausted, it needs a push for it to continue on that trend, or for it to break the trend. Even if it's going to break the trend, it still needs an impulse. It still needs liquidity. It still needs fuel for it to enable that push. Now, some of you will familiar, as you would have experienced this, like you enter a trade, like you have done your analysis. Even for forex traders, you enter a trade and you see that the trade is going well. Like you say, you take a 5 minutes trade and it's going, and at some point it just came down, you lost and it went your way. If you experience that often, please type 11 on the chat box. If you experienced it, if it has happened to you, please type 11 on the chat box. Thank you. It affects me too. But with this strategy, like you are free from that. You are free from that. You are totally, it won't like such a thing will not affect you at all. It will not affect you. Why? Because you are trading basically with the movement of the candlesticks, with the movement of the market. See, every candlestick you are seeing here has a meaning. Every pattern you are seeing here has a meaning. Now, this can be said to be a, I don't know, but I can only tell you that this is a double top chart pattern from here to this point. It is not strong, but you can still say it's a double top. Now, if you're an HFX trader, now if you spot this pattern, double top. Now, double top is a very strong chart pattern that gives you a sell signal that yes, as in, once you see a double top, be expecting a sell. Whenever you see double top, always expect sell in the market. You get, now look at it, double top, rejection here on this candle. The market got to this place, it was rejected. At this particular point here, there is also liquidity here. You understand me? There's also liquidity here. You get, so now the market gets to this place, it tests it and it comes down. You understand? This is another rejection here. You get another rejection. Now, because you have gotten this double top here, which is this place and this place, rejection here on this blue candlestick. Look at it. The market opened at this point and moved here, but it got, the sellers rejected the price and it pushed down here. Now, because you have seen this double top, then you say, okay, if it comes here again, I will take a sell, right? Now, if we test it, it comes here. Now, look at it, the market comes to that point, you took a sell here. Now, if you entered late, there's every possibility for you that you are going to lose this trade. You understand? You might lose this trade because why? Because there's another double top at this point. Look at it, rejection again and rejection. Liquidity now has been mushed on this zone. There is liquidity here. Now, forex traders, now if you're a forex trader, you will agree with me that now if you want to take a trade from this place, you will put your entry now will be at this zone. Forex traders, so your entry will be at this zone. Your stop loss will be from here. Your stop loss might be here, then you will take your trade here. This is how many forex traders take it. You understand? Now it will come up and it will spike you up at this point. Look at it. This is the reason, liquidity. Now, while it needs a push, it needs that push for it to be exhausted. Like it needs the push for it to go down. Same thing happened here. The market hit this resistance. It wants to come down. The market has the impulse in this place is already exhausted. It wants to come down. It needs liquidity. It goes up, boom, and it spikes everyone at this point out. Everybody now everybody now that took an entry from this place for binary traders, because for binary you cannot set stop loss, so it affects binary traders more. Now, for everybody that took their entry here late, everybody now at this point will be spiked out. You will all lose your money. But you lost your money, automatically the trend, but at the long run, it really came down. You can see it came down, but you have already lost your money. You're asking yourself why. That is because you did not wait for the confirmation, your candlestick confirmation. Now, I have said two things here: impulse, exhaustion, and candlestick confirmation. I mean, three things I said, three things I meant. I said before I said the candlestick confirmation. I said impulse, which is this from here to here, from this place, from this point to this point, from here to this place. There's impulse. Now the impulse dies here. You get, the impulse dies here. The candlestick that forms here is a bearish candlestick. This is an angry man, a sort of angry man. Now, candlestick will confuse you at some point in this place, but the best way for you to be able to identify candlestick is to, one, the color they appear in, and secondly, the place they appear on. You get, now if you see such a candle like this, a candle that forms like this in a downtrend and in a blue color, it is not an angry man. You cannot call it an angry man. It is an armor. An armor is a bullish candle. Angry man is a bearish candle. Now, angry man appears at the end of an uptrend. Red. If you see a blue armor in an uptrend, for me, if I see a blue armor, if I see, though the color does not really matters, but if you are very observant with the color, and if you take note of these colors, it will be easier for you. You understand? Now, if me now, I'm trading, I see a blue angry man here, I won't be confident that a sell trend might come out here. You get? I won't be confident. Why? Because it can also be an armor candle, because it is blue. It is an armor. It could be a bullish candle, but now it is red, which is why I can boldly say it is an angry man. Why? Because it is an uptrend. It's at the end of the uptrend. Look at it. This uptrend ended at this point. Look at it. The uptrend ended here before it got exhausted. The impulse on this uptrend ended here before it got exhausted down to this, to follow the trend. You see, look at it. It got exhausted here and it came down. So I can boldly say this is an angry man. Now, even before it happens, before this setup comes, the reason that made me say this is an angry man candle is because why? It is an uptrend. And I know that in an uptrend, there's always exhaustion at some point. When the impulse pushes up, there's always exhaustion. And whenever the market does not get a solid liquidity for any trend, like before any trend starts, like before the trend kicks off, if the market does not get a good liquidity from the original point, which is here, if there is no strong liquidity here, I know that the impulse will not be much. At any point in time, the impulse will break. You get me? At any point in time, the impulse will break. Now, look at this point here. You will see that the candlestick here is neither bearish or bullish. But at some point, a bullish candle emerged here, which is this candlestick here. Look at it. This one. This candlestick here. This blue candlestick. It is a bullish candlestick. It is what we call an armor candlestick. You see that it is almost similar with this one. But the difference here, it is one, it is a blue candle. Secondly, it happened in a downtrend. Now you see, you can see the difference here. It happened in a downtrend, and it happened in a downtrend. It is a blue candle. You get? And now this place, there is no solid liquidity at this place. Look at it. There is no solid liquidity at this zone. So the trend from here to here won't be strong. The impulse that will be pushing this trend to this place will not be strong. Like I said, for any trend that wants to commence, you need a solid liquidity for the trend to push. You need enough fuel for the trend to continue moving. You understand me? So now you have known that there's impulse. The trend moves in two ways: impulse and exhaustion. Now for the binary traders, where do you get your entries? Where can you get your opportunities? Where can you enter this market? You have been able to locate your trend. I come here now, I have seen the trend, a clear and strong uptrend. To get something, they said, according to the videos I've watched, multiple videos and all I've read, to get a solid uptrend, you need 3 touches, right? You need 3 touches. Yes. Firstly, I will draw my support at the beginning of the trend. If you are drawing your support and resistance for this strategy, you don't really need. If you get your 3 touches, fine and okay. You understand? Fine and good. But at some point, you just need your. If it's on an uptrend, like if you come on the chart, you see an uptrend, you just need to get your resistance, your support at the beginning of the trend, because you are a binary trader, you won't be there for a very long time. You understand? You won't be there for hours. You are there to just get. For me, if I come on, I don't take more than 3 trades. No, I don't take more than 3 trades. My first trade is always on $1. When I come on the market, it's my own trading pattern, my own trading style. That was how I trade. Because if you say if my trading plan, if I send you my trading plan now, the way I wrote, make sure every first trade must begin with $1. Now that first trade, if I win that first trade, I'm able to know that the trend or whatever I have drawn out is good. But if I lose it, I know that whatever I have drawn out, there is something wrong. There is something I'm not seeing. And also, I am not losing much. You get, I will not lose much. So I know I have, so if I lost that trade, that $1, the next trade I'm going to take is going to be, it's going to be a trade that is going to help me correct my mistake. And it's still going to be $1. It's still going to, no matter the size of my account, it's still going to be $1. You understand me? So if I win the second $1, I know that yes, I'm in the right path now. I'm calling that I'm now in the right path. Now the next opportunity I'm looking for is to take my main trade. I can put in $100. I'm not saying you should go and over leverage. Oh, please don't over leverage. If you are not sure about what you are doing, don't over leverage. And even if you want to over leverage on your account, risk what you know that if you lost, you won't be bothered. You get. I'm trading with a $300 account. That is the money I use in starting. That's the money I use in starting my pocket option. You get. I'm trading with a $300 account. Even if I want to risk any amount, I want to over leverage beyond the risk. I will never risk above $30. Never. I will never risk above $30. You get? And glory be to God, since I've been using this strategy, I have never lost a trade which I have over leveraged on. Never. I'm not bragging, I'm not, but I'm telling you confidently that since I am trading with this strategy, any trade I over leverage on, I have never lost it. Why? Because those $1 trades I take from the beginning is what I am using to get on those big trades. If I lose the first $1, that means there's a mistake in my analysis. in what I have drawn, in what I have in my setup or anything. And then my next thing is to confirm if the correction I made was actually correct. Please, if you are getting along with me, please type one on the chat box. If I cannot see any questions there, so I'm kind of worried. Maybe some people are lost. Please, if you are lost, if you are lost, or if you're understanding, please type 111. All right, since everybody is going along with me, thank you. I'm happy. Like I said, that my $1 trade gives me the confidence that I am on the right path. Yeah, so if for you, you say, I want to be using $2 to get my confirmations of my trade, fine. But make sure whatever trading plan you have to stick with your trading plan. It's going to help you a lot. Again, that being said, now, how do you draw your support and resistance for such strategy? Like I said, you don't really need your 4 or 5 touches. For beginners, you understand? For the beginners, you that find like you don't know how to draw your support and resistance. Using this strategy, you don't really need your 3 touches. You get me? So all you need to do here is wherever the market gets exhausted, like this is an uptrend. The market still started from here. This is a support. It is a support. So it is just one touch, but I can tell you it's a support. If the market gets to this place eventually, it's definitely going to obey it for some period of time. Even if it's going to break it, at some point it will always obey it. This is the must. You get, at every point you see exhaustion, you draw support. If you're in an uptrend, there is exhaustion at this point. I'm going to take a support here. Look at it. Another exhaustion at this point. I'll take my support here. Now, automatically, I have gotten 3 support lines. You get me? 3 support lines. Another secret for you beginners, for the beginners mostly, you need to know that support zones and resistance, support areas and resistance areas are not price. Understand me? Support areas, and for that, well, somebody said just join. The call is being recorded, so you can watch it again when the video is posted in the group chat. Support and resist. Note this, very, very important, like very, very extremely important. As a beginner, you should know that your support and resistance are not lines, they are not prices, they are areas. So you don't use one particular price as an area. You understand me? You don't use one particular price as an area. An area can comprise of 10 points. An area can comprise of 5 points. Get it? You don't use one particular price as an area. So how do I draw my support and resistance when I'm trading? I use the rectangle. When I draw the lines like this, now, okay, this is the typical example for it. Now, I have gotten such, I know that from here to this point is a good resistance, is a good support. This is how I draw my support. This zone here is my support. This line is not the support. Let me take it off. Let me take it off. I told you before, if you want to know support and resistance for these strategies, at every point you get exhaustion. If you're in an uptrend, I said from the beginning, these are an uptrend moves. If you're in an uptrend, you find this is your impulse, this is your exhaustion. At every point you find this exhaustion, you take your support. can use 5 points. I prefer using 5 points, 5 to 10 points. You understand? Look at it. This is 953. I can say, okay, let me just use 20. I'll take it down to 933. 933. Okay, 932. Not bad. Now this will be my support. Not this, like this 933. This 953 is not the support. This 933 is not the support. They are only walls, like they are just area, like just say like this is the particular house, a fence. They are just fence guiding my support. Inside this place is the support. Inside here is my support. So whenever the market gets, so if the market comes down here, even if it breaks this first line, as long as it does not break, like the market does not come below this place. If the market comes here, I'm good. The market comes here, I'm okay. You understand? But look at it. If the market comes inside this box, I'm okay. You get it? Because at some point, it could just be weeks that, like it could be the weeks that goes beyond, that breaks this structure. Now we all know that if you're in an option, you're getting an higher high, higher low, higher high, higher low, higher high, higher lows, higher highs, higher lows. Now we tell you that once your previous high, once your previous low breaks your, like let's say now this is my previous, a clear example of what I'm saying now. This is the first low the trend is forming, right? Now this is the second low is going to form. They will say if this low breaks this, if it breaks this new low that is here now, if it breaks this previous low, then this trend is broken. The trend is no longer valid. You have to wait for the new structure to form. Then the breakout, that's where you take it from. Yeah, for this question, I'll get to that place. I'll get there. This is the basics. I'll get there definitely. That is this. Your question says, but in binary, since it's high frequency trading, doesn't mean the particular point of entry where the trade is being timed, because one pip difference can kick you out, even if in a profitable area. So how do we tackle that? I will get there. Like I think from the beginning, if you are a binary trader, the best way to trade is from reversals. No reversals. You need to know, like, you need to be better with your reversal pattern, the reversal chart pattern, the reversal candle pattern. You need to be familiar with them. If you want to be profitable in binary, you need to be familiar with them. All right, I will hasten this up now for time purpose. Good. So he said, if this previous low breaks this, that means this trend has been broken. You understand me? So, but if the trend, if the new low comes to this same point where you have the previous low, there is a high chance that the trend will continue, as long as it does not break it. You get, as long as it does not break it, you are good. So wherever it forms above this previous low, wherever it forms, even if it forms here, you are good. You understand? Even if it forms here, you are good. So that being said, that is that. So now back to what I'm saying. We have talked about impulse, exhaustion, and key levels. Those key levels are your support and resistance. I just said it. Wherever you find your exhaustion, Those are key levels. Wherever the market gets exhausted before it kicks up on a new trend. Like, let's say this is the trend now, this is the uptrend, this is where it kicks up from. Wherever it starts to go from the beginning, wherever the trend starts from, that is your key level. So in an uptrend, that should be your support. Yet in a downtrend, that area should be your resistance. Why I don't draw resistance in an uptrend? Because why? I don't need resistance because I will never trade against the trend. I will never do it. You understand? I will never ever trade. See, no matter how solid it is, as long as I know that this market is in an uptrend, I will, because in an uptrend, all these sell candles you see, they are not solid. You understand? They are not solid. They are never solid. They will spike you out at any moment. So for me, I don't even near them. I will wait for that exhaustion. And when the market gets exhausted, a pattern is always formed. You understand me? A pattern is always formed whenever the market gets exhausted. Clear example. Clear example. The market, the market got exhausted here. It got exhausted here. Look at it. This is the point of exhaustion. I'm dragging it out so that you can see it. This is where you get your entries from. This is where this is the point you know that yes, so I want to get into the trade. And I am Josh. Please take notes. I'm about to answer your question now. Please take notes. When this impulse has moved, the impulse has moved from the beginning and it gets exhausted, the exhaustion always forms a pattern, either a bullish pattern or a bearish pattern. You get me? Now, for you to know if this trade, if the trend will continue after exhaustion, it has to form a bullish pattern. You get? If this trend will continue in, please give me 5 minutes, I'll be back. I want to off my gen. Light just came, please. 5 minutes, I'll be back. Thank you. I'm back now. Thank you for your patience. Thank you for your patience. Now, at every exhaustion, see, just take it that for binary traders, no. For that you can still take some because I still day before yesterday I posted a trade idea on Forex. I'm coming. Yesterday, I posted a trade idea on Forex. Believe me, I have got it as I knew about trading 2020 when I go to the IM Academy. Since then, I swear I have been battling like from one strategy to another. Today I'm using this strategy. Tomorrow I'm using this strategy for HFX. I have been doing HFX since 2020. I did not know, but glory be to God, I met Amaka. I am so happy I met her in Easy Mentees group. I think like this is one of the, she was missing out was one of the best thing that happened to me this year. I'm so proud to say it. Because why? She did not just teach me. I'll tell you the truth. See, Amaka did not teach me any of this I'm telling you guys here. But she was there to guide me. She always told me, she always tell me that whatever you learn, make research, do further learning. And when you learn new things, don't scrabble what you have learned before. Add it to them, compile them, filter the unvaluable ones and invaluable, and you continue. That's what I said. Now, for every exhaustion, there is always a pattern, either bullish or bearish. And now, for the trend to continue, it has to form a bullish pattern. Now, this is a pattern. Look at it. These two green lines I drew here. This one and this one. I hope you can see it, please. You can see the two lines I'm drawing, this pattern here. You can see it. Please type on the chat box. Let me know. Let me be sure of what I'm doing, please. Can you guys hear me? All right. Now you can see this pattern here. This is a pattern. This is a bullish pattern. Now, the name of this pattern, you can either call this a bullish flag or a rising wedge. For me, I will call it a bullish flag. You understand? Because it's more or less like a flag. Look at it. It's more or less like a flag. It's more or less like a flag. You can see it like a flag wave down back to the trend. You can see the line. I just off the candles so that you can see the flag. You can see the flag now. This is a clear bullish trend, a clear bullish chart pattern, very clear one. Now, me seeing this now, I know that yes, it has formed a bullish pattern. Now, where do I get in? Where do I look for my opportunities? Where do I make my money from? You understand? Now, this shows that this trend will not break this place. It will not, because of this exhaustion pattern it has formed. Note, after every impulse, there will always be an exhaustion. You might not see a pattern in the impulse, but you will always find a pattern in the exhaustion. It is a must. It is a must. If I go back to this place now, we will find so many. But because of time, I will not do that. But if you practice there, I said after this class, please do research. Try to go and learn more on chart patterns, candlestick patterns. I bet you, man, this strategy will shoot you to the rocket. Like it will shoot to the sky. Yes. Now, me seeing this, and I know that now this trend, this bullish trend, will definitely continue. So I am waiting for the breakout. Look at it. Impulse, exhaustion, key levels, which is your support and resistance, your trend. You understand? Now we are now in the part of break of structure or breakout. You can call it break of structure or breakout. That's why I named this strategy structural breakout strategy. Like for every structure, for you to get in the market, the structure or pattern which is formed needs to break completely. Like the structure needs to break out completely before you are confident. Now, for me, if I'm the person trading on this place, I will not take. Now look at it. Now, if a structure, another thing you need to know, what I have observed, you get me? I did not read this anywhere. You don't say I saw it somewhere. I did not see it anywhere. I did not read it anywhere. I did not watch any video. Nobody told me. I'm about to tell you now. But how did I know? It's constant practice, constant observation. if you are trading, don't just be focused on indicators. Know as in try to interpret the market, try to know how the candles are moving. You get, don't predict the market. A forex trader, for you to be profitable, you don't need to predict the market. Is a clear example of it. You don't predict it, you react to it. You wait for it to act, then you react to it. Now some people now, because the market got to this trend, they will enter it immediately. Yeah, boom, all right, it goes up, okay. But at some point, if you enter late, like you said, 1 point can kick you out of the trade and make you, even if I just 1 point. Now look at it. This is, you took the trade from this point here, and the market came here. The market came here. A forex trader will lose money on this place. I mean, a binary trader, you will lose your money on this place, from this place here. I bet you. A binary trader, you can lose money like this. It is not much, but you will still lose money. You get? So what I'm trying to say that you have to wait for the breakout of the structure. When you see the structure, you don't go in because you see the structure. No, the structure needs to break. You get? Fine, it's a bullish pattern, but you know that the market is being pushed by hedge funds, big banks, the big boys, the elite. Prices, the market will do whatever it likes. So you don't need to predict it. You have to react to whatever it's acting on. The market, even as it forms a bullish pattern, it can still come down and form a downtrend. There's nothing you do to it. You only cry, oh my money, oh no. You have that. I say, oh my style of trading is not good. Let me change. No, it's not like that. That is how the market is. The market will always do what it likes. It will do what it wants. It's now left for you now to react to whatever it does. That's why I say you have to wait for the breakout of the structure. Yes, this is the impulse. We have seen the impulse. This is a bearish candlestick, an angry man, which shows the market will get exhausted. Rejection. Wicks are rejection. Whenever you see wicks, that means the market was rejected at that point. They also have meaning in the market. If I have opportunity for another call, I will do more explanation on wicks and candlestick. Again, if I have another opportunity, wicks and candlesticks. Yeah, but I'm just trying to brief up to rush this call now. So this pattern has been formed. We had everything, like the reason for this little downtrend is clearly here. It's clearly in this place. Like it is so obvious. On here, like this place was very clear that there is definitely going to be an exhaustion at this point. So be careful and watchful of the patterns it forms. The candlestick tells you what the market is doing, but if you cannot read the candlestick, you will not know what the market wants to do. You will not know what the market is doing. So you will only be predicting. You will not be able to react. But if you know the meaning of the candlesticks and the patterns, you'll be able to react to what it does. Now, the structure has been formed. This is the breakout. Like I said, what I'm telling you now, nobody told me. For a structure to break, if the structure wants to break to an uptrend, like it forms a bullish pattern, and it wants to break to the uptrend, for it to break, it needs a bullish candle. Take note. You can write it down. For every structure to break, it needs the candlestick that suits it. If it's a bullish structure, if the structure wants to break to the upside, it needs a bullish candle to continue to the upside. If it's going to break to the downside, it needs a bearish candle take it down. Do you understand that part? I'm going to repeat myself again. I'm going to repeat myself again. Now, if the structure is formed, the structure that is formed is a bullish structure, and it intends to and you want it, like, you know that, okay, yeah, it's a bullish structure, so definitely it's supposed to continue in an uptrend. For you to be sure that the uptrend will continue, the candlestick that will break out from this structure needs to be a bullish candlestick. I don't know too much candlesticks. I only know 6. And that 6, I just try to identify them. I know the few chart patterns, the few candlestick patterns I know, I just try to identify them on my chart, and I make use of them. Chicken, you don't need to know 1 million type of candlestick before you make money in the candlestick pattern. No. You just need to know the ones you know. And the ones you know, you need to be able to identify them whenever you see them. Now, it is because I know the bullish flag pattern, I want to identify it here. Look at it here. This is the bullish flag I said before. I'm able to identify it. Now, the candlestick that broke out of this structure, look at it. It broke out of this structure with a bullish engulfing candle. Look at it. It broke out with a bullish engulfing candle. Now, after the breakout, listen, after the breakout, you get your retest. You understand? I've literally said everything, just reading the candlestick formation. After the breakout, you always get your retest. It's normal. It's obvious. After every breakout, there must be a retest. Even if it does not goes down to that point, to that exact place, there must be a retest. Look at it. It broke out with a bullish engulfing candle. Then it retested. Me personally, I will not take my entry from this retest. You understand me? I will not take my entry from this retest. You get me? I will want to wait to see the type of candle that the retest will form. You understand? I want to see the rejected part of the candle of the retest, like the retest candle. I want to see the rejected part. Is the upward rejected? Is the downward rejected? Is it a bearish candle? Is it a bullish candle? That is what I am looking out for. That is when I am going to get into the market. You understand? Now, if you get into the market here as a forex trader, after this retest, there is rejection at the upside, there is rejection at the downside. You ask me. Now, you said, where would I have entered and why? Fine question. Where will I enter and why? I pick my entries with other blocks. I use other blocks to pick my entry. Like I said, after this class, you have to go and learn everything I'm saying. You have to go and read about it. I pick entries from other blocks. If I miss the entry, no problem, let it go. You get me? But most of the times, it will respect your other block. Now, how do I locate these other blocks? And how do I pick the right one for me? You can get other blocks from engulfing candles, from engulfed candles, I need to say. Like this candle, look at it. This candlestick here, this first stick that broke out of this structure with a wick, you can see, you can place it as an order block. If I place a trade here, This trade, look at it. What's the difference? I'll get to that place, to this point back. I want to show you something. Look at the difference from here to this place. What's the difference? Look at it. And don't forget, other blocks do not have just one side. Other blocks are not prices. Other blocks are also zones. They are also areas like your support and resistance. You need to look them like that. So for me, I will not take this as a good order blocks, as a good order block. Like I said, you get other blocks from engulfed candles, which is a candle that, like this is an order block. You can get your entry from this place. You mark it at the top, you mark it at the bottom. Now, look at it. Look at this other block. Look at it like it is over clear. Oh, clear gone. Over clear, ba. When I mark out this other block, you will see that even the two zones, these two other candles after the retest, if for me, if I'm going on the buy, I don't take entries from this top order block. You get, I won't take entries there. So sometimes I don't draw it, but I know it is the area. But you that is not familiar with it, you have to draw the two lines. But me, I don't draw it. You get, I will just draw the bottom, which is this bottom one, because I'm going in for a buy. So I need the lowest point. You get me now? I need the lowest point to get in for my buy. So if I am the binary trader, I would have got on this trade at 210. Note, as a binary trader, you don't need 20 pips or 20 points to make your money. You just need 1 point. If somebody takes a trade and the trade is deep in profit, no problem. Even if my trade wins with 1 point, I am always confident that I will win because I know what I am doing. You get my point now? Now, look at it now. At some point, I will not get in at this next candle. You know why? Because this candle, this retest candle, did not actually give me a pattern. Even if it forms a pattern, which I know there is a meaning, this candlestick here, this first retest here, there is a pattern for it. That's the pattern. I don't know it. So I don't know it, I will not make use of it. You get me now? Now, the next candlestick form, it is in form of a doji candle. Not really a doji, but it is a kind of a doji. This one. And what do we know about doji candles? Doji candles are indecision candles. These are candles that do not, like, the buyers and sellers in the market are actually dragging that position. So if I was to enter the market, I would have waited for this doji to be exhausted, waited for the next candle. I have marked out my other block now, which is this place. Listen, I have marked out my other block, which is here. Marking out your other block, you mark out the other block nearest to where you want to take your trade from. Note, mark out your other block nearest to where you want to take your trade from. It could be inside your structure, no problem. It could be before your structure, no problem. It could be after your structure, no problem. But it should be close to where you want to take your entry. Now, if I want to take my entry, I would have entered the market at this point, at this level. At this point, look at it. I would have entered the candle, the trade from this candle. Look at it. I'm going to mark it out now. This candle. this candle. Ask me why. Why would I not enter from the retest or from here? I need multiple confirmations before I take my trade. I don't want to lose. Okay, imagine they say over 6.6 trillion US dollar is being traded in the forex market every day, and me, I'm just trading with just $3. The people that are using this 6.6 trillion dollars, they are very, very rich. They are so rich, very, very. So why would I lose my $30 or even $100 to someone who is using $1 billion? He has so much money. That is why he is going to pump it. I'm trading a bit money, so I have to wait. That's why I say you don't predict. Now, if you say as he retest, so make a buy, you will lose. At some yes, you might win, you might lose, but that is what we call predicting. You are predicting the market, and as a trader, you don't need to predict. You need to react. Now, I will take this trade from this point here for a buy, for a 3 minutes buy. And what will give me the confirm, I think all my multiple information I need for this entry here, this my 209 is now I've gotten my bullish structure. I know, yes, the market is in the buy trend. Good. I've gotten my breakout, meaning there's then going to be an impulse. Even the impulse is going to be small. Look at it. The impulse might be small, but there's going to be an impulse for probably the next 20 to 15 minutes. It's always like that. There will always be an impulse after a breakout. There will always be an impulse after a breakout instruction. Why buying at the supply zone or other block? I am not buying at the listing. There are two sides in the other block. I will not buy from this upside. You get? I will not buy from this upside. Remember, now if I had used this upside and I entered at this place or here, I will still win the trade, but it's risky. You get? I need, when you are going in for a buy, you need the lowest points possible. If you are going in for a sell, you need the highest point possible. Note it. Going in for a buy, you need the lowest point possible. Going in for a sell, you need the highest point possible. So the other blocks has two sides, a up and a down. So if I'm going to take my entry, it's either I am taking for a buy, I will take it at the bottom. You understand? Either at the bottom or below. Sometimes, see, at some point, it might break. You get me? It will break. It might break it, come down. But because there is a structure there, you already know after a breakout structure, which is, look at it, after this breakout structure, after every structure that is being broken out, there must be an impulse. You get up that point there. There must be an impulse. It's the must, it's normal. There will always be an impulse. So during that little time of impulse, as a binary trader, you can make money from that. You don't need 30 or 100 people. Just 1 point, you are good. You are making money. So now I know there will be an impulse, and the impulse has started from this place. This is my 1930. What would you know about this? There are specific times in this trade where there are, as in, how would I put it, like the trades prices at this time moves fast and they show you what to do. This is the shooting star candlestick. Look at it. This candlestick here, before the one I will take my entry, is a shooting star. Yes, I'm coming. I want to confirm something here. This is a shooting star candlestick. Although shooting star candlestick is a bearish candlestick. You understand? It's a bearish candlestick. But the colors they come in is what you are looking out for. That's how I trade. That's my own pattern. You get, and it works for me. It works perfectly well for me. This is a shooting star in an uptrend impulse. Don't forget, impulse is at this place. In an uptrend impulse, you get, but it is in a blue pattern. So I know this impulse, because of this shooting star, this impulse will not last, but there must be an impulse. You get, now it ends above. Secondly, it ends above my order block, which I have drawn out. It ended here now at 220, and my order block is at 209. So now when the next candlestick comes, when it finally comes to my order block again, I've gotten now all my confirmations, my candlestick confirmations, my breakout structure, my retest, my everything. I've gotten everything. What I'm for now is to take it. And if I had taken this trade from this 209 for a 3-minute buy, I don't do 5 minutes, I don't do 4 minutes. My trade is always 3. I don't do 2 minutes. I'm always on 5. I don't do 2, 1, 4, 5. I'm always 3 minutes. And I take my trade from only 5 minutes. I don't, if I'm trading, I don't switch to 1 hour. Let me come to look what's happening here, or let me look what is happening in 3 minutes. No, I don't do all that. You understand me? I trade mainly on the 5 minutes. You get me? Now look at it. If I had taken this for a 5-minute call, it got to that place. Another retest. It got to my 209. And what happened? It ended here. 240. Now, binary traders, will you make money from this candlestick or not? Yes or no? Please type on the chat box. Will you make money from this place? Yes or no? Binary traders, please reply me. Will you make money here? Yes or no? See, this part is very tricky and is very, very confusing. The major challenge each binary traders face is picking out your entry. That is one major challenge for every forex, for every binary trader, to be able to pick out your entry. Your order block, that's why you have your order block. Your order block helps you to do that. But you don't just base it on your order blocks. You need multiple confirmations. That's why you have to be familiar with your candlestick. You get? You have to be familiar with your candlestick. Like I said before, I will take my entry from 209. I will take a 3 minutes buy from 209 after this shooting star candle ends. Look at it. After the end of this shooting star candle, look at, I marked it here, shooting star. Can you see it? A shooting, don't forget, a shooting star is a bearish candle. You understand? It's a bearish candle. Yes, it's a bearish candle. But there is going to be an impulse at this point, because after every break in structure, there must always be an impulse. No matter how small it is, that is the impulse you want to make money from. The starting of the impulse. This impulse starts from here. This impulse started from this point here. This way, if I'm taking 3 minutes buy, not sell, buy. The impulse it's a buy trend. It's a buy trend. So I will never trade against the trend. No matter how good it is to me, no matter how sweet the setup is, I will never trade against the trend. It never favors me, so I don't do it anymore. You understand me? So after this blue shooting star candle, because I know this is a shooting star, yes, I will go in. It's blue. It's blue. And it goes along with my other block. A bullish engulf candle other block. You see there. It matches fine with my other block. It ended above my other block. That is why I am sure if I take my 3 minutes buy from this place, I will win this trade confidently. Even if not too much, I am confident I am winning this trade. Whenever I'm going into a trade, bet me, I am always confident of that trade. I'm always sure that as I'm going in there, I am winning. That's why I don't look for much opportunities. If I get my 2-3 opportunities, I'm out. I just need 2-3. Inside this week, yes, I mean early this week, I made $746 with just 2 opportunities. So yes, I over leveraged, but I was confident of what I was doing, because why? This was how I did it. You get my point now? There must be an impulse after every breakout of structure. So you know the first impulse started, you missed it, but it's not going to form a new impulse for you. You understand? Just wait for it, be patient. Wait for the next structure to form. When it breaks out and we test, see, if I've been this retest candle, I had known the pattern of this retest candle, maybe I wouldn't have waited for it to get here. Maybe I would have gotten in at this point. But because I don't know this candle pattern, I don't know this, but I know this one. You guys, I don't know all, but the ones I know, I do my best to identify them in the market, and I make use of them. Shikina, you get me? Now look, now I would have made money from this point. You understand? I would have made money from this point. Remember, I told you, wherever an impulse begins, wherever impulse starts from, there is always a support there. And the market, even if it's going to break that support, it's going to respect it for some time. And that's where binary traders make money from. You benefit from it. You get my point? Now look at this candlestick now here. The impulse started from here. Let me draw it again. The impulse started from here, from this point to this point. This is where the impulse started from. And mind you, this is a chart pattern. Oh. This is a chart pattern. So there's evidence that this trend is about to be broken. You get my point? This is a bearish chart pattern. You have a bearish candlestick here. You have a bearish pattern here. But I still want to make money from here because I waited for this structure to break and I got it. You understand? So look at it. This is the beginning of the impulse. And if you are taking your next trade, from this place, look at this candle here. It came here and it respected it, right? It came here and it went back up. So I told you this strategy gives you multiple opportunities. Even if you miss this one here, you still cannot miss this one. You will get it. Another opportunity here again for a buy. Look at it. Look at this first one here. It broke. This was the first support. It came down. It broke it. I told you. Support are areas. 10, 20, 30 pips, 20 points. That's what you use. Anyone you can use. That's your own. I use 5 to 10. That's me. It came here and it went up again. It must respect it. You understand? So I will put an end to this call here because I've actually explained everything I know. I've actually explained every single way I take my trades. This is how I trade. This is how I make. This is how I've been making money for the past 2 weeks because I learned it 3 weeks ago. I practiced for 1 week and I've been using it now on my live account for 2 weeks and I have been profitable. I went a whole week without a loss. This week, this whole week without a loss with what I just explained for you. All you need to do, go take your time, practice it. When practicing, try to learn patterns, chart patterns, candlestick patterns. You understand? For binary traders, after this call, I will post the types of reversal chart patterns in the group chat. You are still confused about my entries. All right, please, you come to my DM after this call. I will explain better for you. You understand? I will explain better for you. So that is that for now. So thank you, everybody, for listening. How many trades do you take a day / a week to master it? I said I don't take more than 4 trades a day. I don't take more than 4 trades a day. If I lose my first 2 trades, I lose my first $1 trade, I lose my second $1 trade, I'm off. I'm not trading for that day again. I'm not trading for that day again. I am done. I'm waiting the next day. That means automatically I cannot interpret that market. I cannot get anything from there. So I will just get off it. You understand? That's me. That's how I do my thing. That's my own trading plan. It's my own trading rule, my own principle. And I do my best to follow it. Yes, I always stick to the 5 minutes. I don't leave my 5 minutes time frame. I don't leave my 5 minutes. I am always on my 5 minutes until I am done trading. If I want to run it now, because I'm actually practicing this on Forex also. That's why you see 15, 1 hour, and 4 hours here, and a daily candles, daily time frame here. Initially, I only had my 3 minutes and 5. That was when I was using indicators to trade. But since I've been using this strategy, I don't leave this 5 minutes time. I'm always there because all I need is here. Everything I need is inside these 5 minutes. The trend is here, support is here, resistance is here, every single thing is here. So where am I going to? I don't need to go anywhere. I'm just here. I'm going to make my money here, and I don't take more than four trades. Maximum 4, 5. I'm done. I'm out. You understand? Make your daily percentage. If you are doing your compound plan, make your daily percentage and you leave the market. You understand? I stick with the 5 minute time frame, and my trade is always 3 minutes. You can see it on my, see it here. This is my broker. This is my trading account. Now look at pocket option. All the currencies are down. You can't trade. Look at it. You can't trade. Why? Because this is the time for the Asian trading session. This is the Asian trading session time. You get it? Asian trading session time. So pocket option will not give you that privilege to access it, because why? There is no much money to be made. The percentage on this session is very, very low. So you cannot trade anything here except OTC, which you don't like. You don't even want to trade OTC, my fellow trader. You don't want to do this thing. I assure you. You get it? So if you know you still don't understand, okay, market close for currency initially. Even if it closed, fine. Yes, it closed. But look at it, it's still counting here now. It's still counting here. Okay, it just ended. It just ended. But it's like that. It's always like this on option. At 9, the market closed. Many pairs. You won't even see so many pairs. Many pairs will just be taken off. You understand me? That's all for now. That's all I do. That's how I trade. So I'm grateful for everyone that stayed till the end of this call. I'm happy. So I'm ending this call now. Goodbye, everybody. Thank you.